Good evening and welcome to the Power of Passive Investing webinar series. We have a very interesting guest today, Angela Kim. As you know, we are primarily, our guests are primarily real estate investors, and they always talk about various opportunities or various ways to invest and buy real estate and so forth. But Angela's topic, while different, is very much directly related to real estate. Angela calls herself credit repair boss, and you'll hear that for a good reason. She'll talk about credit and how to repair it and so forth. And credit is something that's really essential when it comes to buying real estate, whether you're buying for yourself or as an investment properties. So I felt that this was a very important topic for us to hear and learn from an expert like Angela. But first, we'll ask Angela to introduce herself, tell us a little bit about herself, and then share with us some nuggets of wisdom about credit. Angela, the floor is yours. Take it away.
Yeah, thank you. Thanks, Selena, for having me. And yeah, hello, everyone. My name is Angela Kim with Credit Repair Boss. Yeah, definitely credit is such an important part in life, yet it's not spoken about often and not educated in our system for us to be knowledgeable when we're out in society. I feel like a lot of kids' first exposure to credit is oftentimes at college orientation when you're given freebies and that's how you're applying for your first credit card. And a lot of clients make mistakes and we learn from it. So I wanted to kind of touch upon how credit works and how bettering your credit's going to be detrimental part, especially if you're an investor. And oftentimes you're trying to build your net worth and leave generational wealth for your posterity and your next generation. What's important is your credit and how you can maximize all your opportunities, as well as on the personal side and business side to grab a lot more opportunities. So today's title is Leveraging Credit for Your Business. So just to touch upon a little bit more about myself, my name is Angela Kim, and I am based in Long Island, in New York, in Uniondale. However, we are not limited just to clients in New York. We service clients all over 50 states where we are a credit consulting company. I'm sure the name of our firm has given away quite a bit of more insight as to what we offer, but we are a credit consulting firm helping a lot of clients with rebuilding and restoring their credit and their credit scores. So it's obvious once you have better credit score, if you're an investor on the real estate side of things, better credit will determine your interest rate, as well as even sometimes how much you may need to put down on your down payment. So we'll get to that in a little bit. And at Credit Repair Boss, we've been in business for over a decade. It's my 11th year in the business. It's actually a family business. My dad became a partner in the firm more than a decade ago. So that's how I've been involved in the credit consulting firm. But we love what we do, and we're able to service clients all over 50 states. So we have a West Coast office in Seattle. We also have an office here in New York, but there are a lot of clients that I've never met before out in Alaska or down in Georgia. But geographically, we're not limited at all, which has been wonderful. And we are very well recognized in the space of Google. Actually, this is a little bit dated. We have over 650 Google reviews. If you Google us, you will see a lot of different reviews from our clients that we helped in the last several years. That really goes in depth. When you Google a business, you could kind of learn a lot about that business. And it's not just like a one sentence or just 5-star review. A lot of clients, sometimes they even write essays about the transformation they've had with credit and how great it has been for them and their business. So yeah, we offer free consultations. So what does that mean? If a client has a problem, I get asked all the time, how long does it take to fix my problem to be ready to purchase my first home? And what's the cost involved? Well, I always ask, what is your problem, right? And a lot of the times clients are not aware of what the issue might be, hindering you from getting your mortgage. So we offer free consultation where we can essentially assess what your issue is with your credit and for us to diagnose what the issue is to provide the right treatment for you. So I love this analogy, but it's like going to the doctor's office where you do need to know and get a diagnosis from a doctor to get on the right treatment plan for you. And depending on your illness, how long it's going to take to heal, the costs involved, and where you would be at the end of the treatment is going to be different. And that's exactly how it works with credit. So I wanted to just kind of open up with this story time. And I love giving real stories from clients in very different situations. So going to touch upon why having credit is so imperative on saving money and building your business. So these are actually two real clients of mine, and they happen to be best friends, and they have a lot in common. So John makes $120,000 in income, and he is actually in the market to get a car. And his job by trade is engineer, but unfortunately, due to a horrible divorce, his credit took a big hit. So right now, his credit is 568. On the other hand, we have Joe, who is in union space where he's an iron worker, and he makes the same exact money as John. He makes 120,000 a year. So he doesn't have a house yet, but he's actually planning to save enough money to eventually buy a home. So that's his end goal. And his credit score is 736. So even with two best friends here, there's quite a bit of difference, right, in their credit score. It's about 170 points and change in their credit score. So if they're both shopping for a same car, and they are at a dealership, they're just trying to get into a Jeep Wrangler. You might be aware of this vehicle. It's one of those very popular Jeep models, introductory model, and it starts at 24,000. It's a small SUV, and they are both interested in the same model. So when John presents his credit score at 568, when the finance manager pulls it, because his credit's not good, he has to pay $5,000 down. That's not so bad, right? Because then you're only borrowing, $19,000. The less you borrow, usually the less your payment's going to be, right? But because of his credit, he's having to pay 21% in interest. So let's go back. If John can comfortably afford 578 a month, he thinks to himself, I make six figures. I can afford close to $600 a month, no problem. But when he came to my office and I ran the numbers, I was shocked. Because if you do the monthly payment of 578 for a period of 72 months, which is 6 years, he's paying $42,000 and more for a $24,000 car. So it's close to 18,000 in interest. On the other hand, because Joe has perfect credit, his credit is very good, he did not have to put any money down. And most importantly, his interest rate is only 5%. So what kind of difference does that make for a car that you're buying for $24,000? His monthly payment is $387 a month, and he's paying it for the same exact amount of years, 60 or 72 months, as his best friend John, and he's borrowing less money. He's not borrowing $19,000, he's borrowing $24,000. So the total cost of the car for Joe, even with interest, is only $27,829. So it's power of credit. So what does this mean? All of these different things is something that you could actually refinance in life. So I just broke it down for John. John had, not the best credit score. And this is actually how you would see it on someone's credit report. All the information is redacted. But if you pay that kind of payment for over 6 years, you really end up paying that much in interest. So we were able to refinance this car for him, and his payment went down from 578 down to 360, and the interest was slashed to 5%. And the total cost of the car, instead of being 42,000, he's saving 26 for the total cost, and he's saving a lot of money. So all in all, this is not quite fair, right? Our society doesn't really do a good job educating people. And I was able to hear a good news this week from a public school teacher in Sewanaka, which is a very local high school close to where I live, where I work. And starting September, So the freshmen are actually learning about financial literacy. So I was excited to hear about that, but it's really not fair. A lot of people are struggling once you make mistakes. Like John, he just went through a nasty divorce and he's completely crushed, paying so much in interest. So what can we do moving forward for all of these different things? It's really at the end of the day about your credit worthiness. John and Joe may have similar jobs, but their credit worthiness was completely different. You could have a 25-pound of brick. You could also have a 25-pound of gold. But what's more valuable here? Obviously, it's going to be the brick of gold, not the brick itself, but it's going to be a bar of gold. So we really focus on helping clients refinance a lot of different avenues in life. Coverage is an example. If you're a real estate investor, and oftentimes you're investing six figures or seven figures. So imagine how much more money you could save in the long run, how many more vehicles will you be driving. So importance of credit really comes in clutch and saves you a lot of money. So I know I'm going to get a lot of questions about this. What is a good, perfect credit score? Well, if you're getting into a mortgage, usually you want to be in the 680s and better. If you're getting a conventional mortgage, you at least want to be in 680s because believe it or not, every 20 points puts you in a different tier when you're getting a mortgage. So you may sometimes, I've had two good friends purchasing a property together a few months ago that came to me. And because one of the friends' credit score was not very great, they could no longer do FHA. So what's the FHA mortgage? It's a federally backed mortgage where you could put only as little as 3.5% down. But because one of the friends' credit score was 530, they could not do FHA, the normal FHA that we are thinking of, 3.5% down. They had to put down 10%. But luckily, that friend started to fix credit with us, and she'll be ready to go FHA 3.5% down on month of October. So power of credit really comes in many different ways, but I would say 850 is a perfect credit score, but you don't have to have a perfect credit score. If you're in the 700s, usually you can get best rate in a lot of the things that you're looking to finance. So what do we do? How are we different from other credit consulting companies? Well, we have a team of 20 attorneys in our firm that we utilize to litigate on our cases. So this is actually a real client of mine. His name is Michael. And he came to me because he wanted to fix his credit to buy a house. And he had a very steady W-2 job, and his credit score was not great, 636. You want to be 680 or better. So when I was reading his credit report, I noticed there was a really big error on his report. So he had this auto loan with Capital One, and he bought the car in 2015. And, he went through some tough times and he had to give the car back. They voluntarily took the car back, and the client owes $16,000. Michael owed $16,000, which is a lot of money. So up until here, this is pretty accurate. But what happened here is they were actually double reporting on his credit report. They reported it here once, they reported it again. So what are they doing? They are violating the federal law because it's double reporting and hurting this client from actually qualifying for a mortgage because making it seem like he has two separate cars that he owes money on. So what do? We sue them, sue the creditor, and sue the Capital One along with the credit bureaus. And what was his credit score before? It was in the low sixes. In a matter of 3 months, we got his credit score up to 759. So that's power of going above and beyond for clients. We're not one of those small credit repair companies that just do generic disputes. Traffic lights don't end up on the credit report anymore. Parking tickets don't end up on the credit report. So just doing generic disputes that I did not have a Chase account, that's going to be a waste of money for you and time if you were to retain someone to do that for you. So we were able to successfully delete those derogatory remarks, completely gone off the report. But most importantly, the client was forgiven for close to $16,000 of the car debt that he owed. So that's what we did for the client. So I wanted to just kind of segue into how having good personal credit as a business owner, whether you're incorporating LLCs to purchase properties and house under each LLC to, minimize liabilities. God forbid anyone sues you, you want to hold properties in each separate entity, right? And that's how I invest all the time. But really comes in clutch when you are investing for properties or even just purchasing a business. How can this really affect your credit? Well, there's a separate portfolio for personal credit and business credit. It's very different. It is intertwined, and I'll get to that in a little bit. When they pull a business credit report on you, there are different ways to judge your credit score. It's very different from personal credit score, where perfect credit score is 850. But they look at you on Duns and Bradstreet, as well as Equifax, Experian, and different platforms to judge, oh, you actually qualify for the six-figure line of credit. And they judge that based on looking at your personal credit report, because at the end of the day, you're personally guaranteeing for that business line of credit. But they also look at your business credit form. So when you are incorporating and you've established a business, that oftentimes you get something called EIN. So that's a distinctive number you get as a business owner for that particular entity, and it kind of works as a social. So it's really at the end of the day all about structuring your business. So we have to make sure your personal credit's very, very good. Better the credit, the more money you would save. Imagine you leased a six-figure truck for your business. And if you were in the situation of John that I mentioned at the beginning of the webinar today, you might be paying a lot of interest without you realizing. Because unfortunately, a lot of the dealers don't care about how much you pay in interest. They want to just sell the car off the lot. So when you sit down and actually review your numbers, you'll be shocked where you might be bleeding money in. It might be auto loan, it might be a mortgage, or it might be a business loan that you may have. But it's really important to leverage by having good personal credit. So that way, when you have the right business, whether it's an entity of a C Corp, S Corp, or LLC, you name it, we can help you to build business credit under each business entity. You might be a business owner, but what if you have 7 different businesses? Will you have one business credit? Absolutely not. You will have 7 different streams of business credit under your belt. Let's suppose that you have a laundromat business, you have a real estate portfolio management company, and you have financial advisory, and you have a different, used dealership. Well, all of those are going to have separate credit, and that's the beauty of it. Why? Because it tags off of your personal credit to guarantee for that. But the amount of business credit you could build under business is infinite. So set up your vendor accounts, meaning if you have Home Depot account for your management company, you want to make sure you're getting credit for that. Don't buy that on your Home Depot personal credit card. Get it on your business card. Get it off of your business credit so that you could write off the interest on it when you're paying for it. And we can coach you on all of those steps. Okay, so it's really at the end of the day all about structuring, and everyone's credit situation is very different. Well, I get asked all the time, oh, my credit score is 680. I have one problem. And there's never been a case for me where that's been true, because everyone's credit is very different. Even a husband and a wife who's been married for decades, they are going to have a very different credit portfolio. So even if you think it might be a one problem, we want to take a step back and look at it from a holistic point of view to make sure we find out the issue on your credit and provide the right solution to help you get to your next step. Are you looking to purchase your first business? Are you looking to invest and grow your wealth with Alina? Are you looking to purchase another property to have more streams of income passively by having rental properties? Well, how is your credit? Right. I had a investor who has a lot of properties under his belt, and he went through a nasty divorce. And because of the divorce, his credit got ruined. And he used to buy properties with hard money, only put 10% down. But this time around, with just bad credit of 580, he had to put down 20%. Although he's not new to the industry. So credit's really important, as well as experience, and we're able to help you with structuring everything. So I just wanted to kind of open it up for any kind of questions that you may have. But at the end of the day, having great credit is going to save you a lot of money. And it was really heartbreaking for me when I saw a lot of small business owners struggle during COVID, coming out of COVID. As you know, the best SBA EIDL loan that's been ever given was in the threes, and even certain times at twos, where it was locked in for 30 years, and you could get it as long as your tax return shows the revenue of your business. But a lot of clients could not qualify for the maximum of $2 million for such a good rate because of their credit score, not because of the revenue of their business. So when we are constantly hearing on the media, and a lot of people are holding back from making a lot of large decisions for their family financially due to election, a lot going on, you have to make sure that your savings is safe. In times like this, you have to use other people's money. You have to use your credit. utilize bank's money for you to grow wealth for you and your family. And it really starts from examining where you're bleeding money in. Could be a lot of different ways and different avenues in life, but we are here to be a resource to you for anyone looking to improve your credit, which could open a lot of doors for you personally, financially, for your business as well. We're here to be a resource. So feel free to Google us. There are plenty of reviews, and I'm sure Alina will be sharing my direct information to all of you. But yeah, here to help with anyone with bad credit, such as late payments, collections, judgments. Are you contemplating to file for Chapter 7? Or Chapter 11 for bankruptcy? We can help you navigate through that process. And there are a lot of clients where you are not the right candidate for credit repair, then I can refer you to the right professional to help you file for bankruptcy. But even if you file for bankruptcy, it's not end of the world. As soon as it gets discharged or dismissed, I can help you rebuild and restore your credit. So yeah, thank you for having me. And yeah, that's all I have for today.
Wow, that was a lot of information and very, very informative, Angela. Thank you so much for sharing. Um, while we'll wait for our audience to come up with questions, I have a few questions to you. So on one of the examples that you showed us for your clients, the information was reported twice. I forgot the person's name, but you said he owed for the car and it was reported two different times. Um,
Yes.
how situation like this happens? Is this like a pure error or do the agencies
That's a good question. So, a lot of people think that Equifax, Experian, TransUnion, who's holding your credit information, is federal organizations, and it's absolutely not true. They're regulated by the government, but they are at oftentimes making a lot of mistakes, which could cost you money. So it could be pure mistake. And a lot of times they auction the car when they've taken the car back and they don't update how much you actually owe on the credit report. And that's kind of what happened with this particular client, Michael. But believe it or not, they say 1 in 4 Americans have errors on the credit report. And you may not know it. It's because
That's
you
a
don't
lot.
check it. And as
That's
you know, yeah, a lot of identity theft is on the rise. 2.5 million American social was stolen last week. We heard about it, but in fact, it happened 3 months ago. So I think it's really lack of education and lack of knowing and understanding what's on your credit report. So that's just for one particular client, but you should check your credit actively. Not because Amex gives you a free credit score, it's just not accurate. Credit Karma gives you a credit score, okay, great, but it's not giving you experience. You have to be active and take ownership. You check your bank account all the time, right? Every day. You have to check your credit at least once a month to make sure there's nothing inaccurate on your credit report. There's nothing fraudulent, to make sure that you're on track. Because, when opportunity comes and presents yourself, you want to make sure you could grab it. And it starts from having good credit.
Yeah, and do you recommend checking credit report from all three agencies or one's enough?
That's a good question. So a lot of the times clients use annualcreditreport.com. It's free. It gives you the 3 bureau report, but it doesn't have a number score. So it's not an accurate way to judge your credit score. So what I would always recommend is check all three, but making sure that you could actually see your credit score. Experian charges $40 a month, which is quite a lot of money. So we usually, every time we offer consultation, we have you sign up at a credit monitoring called Identity IQ. $20 to pull the report. It's not a hard inquiry, but you can see all 3 credit bureaus and all their credit scores at one page, so you understand where it is with your credit.
What's the website again? I'm gonna type it in the chat.
Sure, identityiq.com. I'm going to share it right here on the chat box
Oh,
so
you
you
will.
could
Okay,
pass it
perfect.
out to everybody.
Yeah, so that people can grab that Identity IQ, and it's only $20, right?
$20 a pull. If
Yeah.
you cancel it, it's only one time $20 to see your credit report. But if you want to get dark web scans and get your credit report every month, then they charge 20 a month, and they give identity theft insurance for up to $1 million. That's a great way to check credit.
Yeah, and definitely very affordable. Besides the three main agencies, are there any other agencies that people need to be aware of?
No, it's just 3 for the personal credit report.
Got it. Okay. And then in terms of applying for a loan, you said that when you're applying for like your investment property loan, you may be buying it through an LLC or an S corp and so forth. So they often look at your personal credit as well as your business credit. Um, do you know on average how long does it take to build that business credit? Is there a timeline for that?
Yeah, that's a good question. So, from my experience, it's usually good to hold properties in a separate LLC. So, let's say you bought a property on One Acorn Avenue. You want to have a LLC just for One Acorn Avenue. Let's say Two Acorn Avenue opened up and you want to buy that property, and it's best that you open up another LLC for Two Acorn separately. Building credit separately is something totally possible for each property. But when you are getting into a property, maybe the deal presented itself to you yesterday, then you wouldn't have any business credit for it. And you just made the LLC as of today, September 4th, but you can still buy the property utilizing your personal credit, and your personal credit is going to lock in that mortgage interest rate. But you
Mhm.
can build business credit under that LLC that houses One Acorn, and we can make that happen. Usually, bank wants to see 2 years after you get incorporated to give you any kind of loans or lines of credit. However, the moment your LLC is established, I can help you build out business credit. There are different business credit cards. I can help you build out your credit portfolio. When the time comes, you can get a nice sized line of credit or loan to leverage and do more investments.
That's an excellent segue. So let's talk a little bit more about obtaining line of credit because obviously you started your presentation with sharing with people how you can help to repair their credits. But when it comes to obtaining loans or line of credits for folks like us, investors, it's
Mhm.
also important to know that there are ways to tap into the lines of credits
Yeah,
as well. And
absolutely.
that's a source of income, source of money as a down payment that you can potentially help with. So,
Yeah, that's good. So, for property related companies, the line of credit is probably best to get a HELOC. So, a lot of the times when you're buying properties, you utilize a mortgage product called DSCR, debt
Mhm.
service coverage ratio, where you're buying that property. They don't necessarily look at your income. It goes off of the revenue of the rental income that the property is going to generate. So, if you have plenty of income and revenue in that particular property, you can pull out something called home equity line of credit. Utilizing that DSCR program, you keep the primary, but you get a line of credit, which is a home equity line of credit for you to do other investments. Segueing into lines of credit in general, let's say you have a painting business and your business has been established for over 5 years. If you have a good 2 years plus of tax return and your personal credit's very good, and we helped you build out your business credit, then you can definitely get a business line of credit or even loans, depending on. But I think the way you structure for a real estate related, let's say a property owning LLC, is going to be different from a different types of business that needs a different kind of loan.
Of course, of course. Thank you. Yeah, that's definitely good to know, and good to know that it's something that your firm offers, so people can reach out for that to you as well.
Yes.
Um, Okay, in terms of building a credit, you said that every 20 points can get you into different tier. Um, and if someone wants to build up their credit, uh, is it built up by 20 points each time, or
No.
points is just when
So you're
it's
right.
acquired?
Your credit can go up 120 points after 30 days of working with us. But
Mhm.
just for the real estate example, when you're getting priced out for a mortgage, every 20 points saves you a certain amount in your mortgage by lowering your interest rate. But your credit can go up 1 point, or it could go up 5 points, or it could go up 150 points. There's no threshold as to how much it can go down or how much it can, depreciate.
Got it. Can you walk us through common case examples of what can bring a credit down significantly? And then
I would
you can
say, right. So the
add
tips
more
that
up.
I like to give is making sure that you don't close out your oldest credit card. So believe it or not, that first card you got at college orientation or credit card from, let's say, maybe
Discover. I have discovered.
that you don't use is probably holding on as an anchor on your credit report. So usually the older the credit account, the more beneficial it is for your credit because it's adding a lot of age and depth to your credit history. So I would say do not ever close out that old account that you never really use. Try to buy some groceries with that card. Try to put some gas on that card and utilize that card so you could lengthen your credit history. And a second tip I would like to say is always make sure that you're on time. Being late on an account is one of the biggest factor to drop your credit instantly. So make sure you have automatic payments in place and that you're on time with all your accounts at all times. Very important. We all have very busy schedules. So I would highly recommend having automatic payments scheduled, but you can't just rely on it. Place that auto pay, but make sure you follow through the next day to make sure they've taken out the money.
Got it. Thank you. And why is it important to not just keep that card open, but also make periodic payments on it? You mentioned.
Because making payments is important, but if you have automatic payment, even if you forgot about it on month of September because your kids are going back to school, for example, it's automatically paid for. So it's kind of like set it and forget get it. But I like to just double check and refer back to it a day or two after it's processed because being on time is most important on someone's credit report.
Right. No, I meant why is it important to make purchases on that oldest card, not just to hold?
Because if you don't use a card, they're going to close out the account on you. So
I
you
see.
have to actively use the account for the bank to have the incentive to keep giving you that line of credit. Because as you know, the economy is not the best right now. So what banks are doing is if you don't use your account a lot, they close out the account on you. So you have to use that card for them to keep the card open. That's why you have to use a card. Otherwise, they're going to close it out.
Mhm. Got it. Can you give us an example of what can potentially improve your credit by a lot? Like,
That's a good question, but it's hard for me to just say one thing because everyone's credit's in a very different situation. A way to boost up your credit, what I would say is two things. Being on time,
Mhm.
payment history is over 30% of someone's credit score. So being on time consecutively is the most important thing. So I would always suggest doing auto pay. The second thing I would recommend is befriending the bank. So banks are relational, right? If you have a Chase checking accounts and savings account and you also have a credit card with them, chances are they're gonna like you, right? Because if you're getting your W-2 income in there every week, every other week, and your all your card payments are paid out of there, they're gonna love it because you're getting a lot of transactions and bringing that transactions to the bank. So what does that mean? If you have a certain account and your credit's very good, I would knock the bank's door and try to get a credit line increase every 6 months to try to befriend with the bank, have a good relationship, and ask them for a credit line increase. But don't do it too often. Do it every 7 months, 6 to 7 months to keep a good relationship. Grow your cards with them, but keep in mind if you don't use a card, they're not going to give you that credit increase. So make sure you utilize a line of credit for the bank to like you. Of course, you got to have good credit, but you also have to make sure that they like you. So bring a lot of transactions, meaning utilize a card often.
it's interesting that you mentioned that even for big banks, relationship are critical because I was always under assumption, it's a big bank, you're just a number and no one's gonna count you. But when that bank is local and you have the ability to meet with them in person and show them that you're bringing business to them, then that can open up additional opportunities for
Um,
you.
yeah, a lot of good community banks and federal unions out there, but I will be honest, you're seeing a lot in the news where banks are getting bought out all the time, right? So if you have I wouldn't say that they're going to give you a credit card just because you have a checking and savings personally with them. If you have a business and you're
Mhm,
bringing 7 or 8 figures of monthly or annual deposits, then they
mhm.
can maybe supersede their supervisor and give you an extra credit card. But at oftentimes, all banks, even Chase, Bank of America, Wells Fargo, Capital One, even those very big banks are relational. They are huge, but when they give you that credit line increase or when they approve you for that card, they look at you. They look at you only, and they look at your credit score, they look at your net worth in order to make that decision.
Yeah, no, that makes perfect sense. Absolutely. And thank you for sharing that. Um, any other questions from the audience? And Angela, any final words of advice for anyone who's building up their credit?
Yes, I've been helping a lot of clients who are immigrants and where they immigrated to this country 10 years ago. So their credit history is essentially 10 years or a lot less than that. So what I would always advise is check your credit often because I've had a client who's living in New York, relocating. She actually immigrated to Florida first and she moved up to New York and she's trying to move back to Florida. And when she's trying to enter into a contract and she already signed a contract, I got a phone call from the loan officer that there was a $20,000 fraudulently open American Express on her credit that no longer qualifies her. And it happened very quickly. She already got pre-approved 6 months ago. And on the fifth month, she was entering into contracts. What I would suggest in a time like this where identity theft and fraud is very high, check your credit. Make sure you check credit. Make sure everything is looking good as you do with your checking accounts and you look at your daily balances. Important that you check and credit and monitor it, which is very important.
For sure, for sure. Thank you. This has been definitely a now eye-opening presentation, and thanks for sharing the information. For the folks that want to reach out to you, please share your contact information.
Yeah,
So
sure. You could reach me at my email, Angela at Credit Repair Boss. But yeah, probably a lot of clients would like to speak with me on the phone first. So you can give me a ring at 516-698-4303, and I just share my information in the chat box.
excellent. So it's there for a recording for those listeners that are watching this presentation later. Thank you very much for that, Angela. And for fun, we typically like to ask our interviewees, what do you like to do outside of your business for fun?
Oh yeah, I love to travel. Travel is a big passion of mine, and I lived abroad. Growing up, I lived in Australia for a year, and it really opened up my horizon. And there's so many different ways to live life, and cultures are so different. So I love traveling the world. I haven't been to Africa yet. I would love to visit South Africa before the year ends. Fingers crossed, hopefully. But yeah, I love seeing the world and kind of putting myself in different lives and what it's like to live in someone else's shoes. And I love that experience. And it kind of ties in with what I do. So yeah, I love seeing the world and new experiences. So travel is a big passion of mine.
Got it. And so what are some of your most favorite destinations so far?
Favorite destination, I would say Maldives.
Sure.
Traveled like almost 24 hours to get there for honeymoon, but yeah, it was worth it. Very, very beautiful country.
Nice.
And another place I loved, I would say I have a painting right in the back of my living room. I loved Greece. Yeah, I love seeing the ocean, the endless horizon, and the beautiful water. So yeah, I love Europe and I also love the Maldives a lot.
Excellent. Those two are very beautiful destinations, so definitely worth checking out and traveling there, even though it was a long time to get there. Angela, thank you so much. This has been an eye-opener and very, very valuable. I'm sure folks will want to reach out to you. Thanks for sharing your contact information.
Nice.
And on that note, we wish everyone a very nice evening. Thank you. Good
Okay,
night.
thank you.
Bye.
Bye.